All right, get Nick White here today. Nick, thanks for coming today.
Appreciate it. Thank you.
So, Nick, you're obviously a lender. You work in the residential lending area, and you're, what you tell me is right, the only guy in New Hampshire right now branching off from Megastar.
Yep, that's the truth. So I was at a company called Guaranteed Rate. Everyone's heard of them before. One of the biggest mortgage companies in the whole country, for that matter. And I had an opportunity to grow my brand out west in Colorado, and also here in New England with this new company, and everything has been great so far. So
Gotcha.
it's really cool providing a different approach to clients and seeing them be happy when they close. So it's pretty cool.
Yeah, absolutely. And I know, we've known each other for a little bit now. I've sort of seen how you handle clients and alongside just, the way that you bring your approach to clients, getting them all the way from practically no knowledge of lending whatsoever, all the way through a process to the closing table. Super seamless, and I've always respected that. And in addition to that, I've sort of respected like your way of, like I said, being the only guy in New Hampshire now. You're sort of starting from scratch. You have mentors, but you have no mentors in the area to sort of branch off of, with past leads maybe they had. So, tell me a little bit what it's been like trying to build essentially your own business.
Well, the first thing people say is, "What is that? I've never heard of that before." And that's honestly the challenge I wanted to, was to provide a different approach and a different style to mortgage lending. I didn't want to be the same old guy at one of the more established companies here in the Northeast. I wanted to provide a different approach. And so far, for the clients that I have worked with and closed with, it's been a really, really great process. But there's still that, oh, like, we don't know who you are, why should we work with you type deal. So, and with that takes time and reputation and word of mouth from other people to, vouch for you. So it's definitely been a bit of a journey, and I'm all in to go as far as I can with it.
Yeah, no, that sounds awesome. And so, kind of segueing into essentially like the mortgage basics, like you said, you like taking that approach of zero knowledge and bringing your clients up to speed essentially with what it is that they need to know, right? Because like, I'm a realtor and I don't need to tell the clients and teach them every little aspect of real estate just because it's kind of overwhelming. So understanding the mortgage basics, what are some of the main things that, any client that knows nothing should know?
Well, first things first, buying a house is super comprehensive. There's many intricate details that come with it. And it's up to people like you and I, who have our respective roles within the industry, to guide clients along the way to make sure that they have all their questions answered. So my role as a lender, I take a more comprehensive role with it. I love to walk through the application with the client, and that allows me to learn more about them, what their goals are, their motives, what their time frame is looking like. I get a simple understanding of their finances, their employment, the whole basic stuff when it comes to an application. And that allows me to also build rapport with them. And then always after that initial application call, I always set up time for a few days after for a consultation meeting. And during that meeting, it can last anywhere from 30 minutes to an hour. And we go through different mortgage programs, different products, different scenarios to run through, just to make sure they have a better understanding of where each dollar is being allocated into. And if they come across a certain program they like, we go with that program. It suits them best with their current financial needs and also their comfortability levels too.
Gotcha. Okay. So, I mean, yeah, like you said, you kind of take them through the entire process, start to finish. My question is sort of like, what's the most, I guess, reluctant reason why somebody is maybe worried about getting approved for a loan, or they don't even want to visit the subject of getting a loan? Is it like, just mortgage debt ratio to income? Is it credit score? I mean, what's most often you find that people are hesitant?
To apply for a mortgage?
Yeah, or even just to, accept the fact that they could potentially get approved for one and they just are under the impression that they can't.
I think one of the biggest reasons why people are hesitant to take an application out for a mortgage, they're ashamed or embarrassed of their current financial situation. And that it can be a tricky subject at times for people. We're not financial advisors by any means, but in a way, we do advise them on a pretty big investment, and that's buying a property. For whatever reason that may be, whatever that goal is, buying a property is a big investment regardless. And I think a lot of people don't have a great financial situation, and that can be embarrassing for someone to look at. The fear of being judged, the fear of being, misled, even for that fact. So that's why during the initial application call, I love to build rapport with my clients to make sure they're comfortable working with me. They know a little bit of what I'm about, and they're okay with opening up to me about, hey, I'm not where I want to be right now, but how can I best prepare and plan for that purchase in the future at some point? I think that's, from what I've seen at least, the biggest hesitation as to why people don't want to run a mortgage application.
Gotcha. And so I wanted that sort of to segue into at least a little thing that I feel like I should add to is, and I've talked to you about this before. When I went to buy my house, I had actually talked to a lender like a year and a half prior to that. And I had kind of just given him my situation. I said, here's my income, here's my credit, and essentially I'm looking to buy a property within the next year to 2 years. What should I do starting today to put myself in a better position in a year from now? And whatever it was at that point, he told me, I know I opened up a second credit card to expedite my credit score being increased. But the point I make, bringing this up is like, it's always wise to reach out well beforehand. Like I said, I did a year. You tell me if a year is necessary, 6 months.
It totally depends on the client. Everyone's situation is different financially. If someone they're struggling with debt, let's find a way to clean that up. If maybe they need to increase their income, what are the steps you can take to make sure that happens? Maybe you just want the market to reset and you want things to be a little bit better, or whatever the case may be. People's time frames are different, but I think it's a good idea to talk to somebody in the industry to get their opinion, maybe even 2 or 3 different options, so you can weigh the opinions of those people and then set up a game plan for yourself moving forward. It's better to be proactive versus reactive with it. So setting yourself up 1, 2, 3, 4 years in advance, maybe even only 3 months, whatever your time frame is, it's only a net benefit at the end of the day to talk to someone beforehand.
Right. And how often would you say, do you have people reaching out to you well beforehand? Do you see people often being proactive?
One of my buddies from college hit me up and was like, hey, I'm not buying until 2028. What should I do to get started? I'm like, well, it's 5 years out from now.
Yeah, a little early, but
it's far ways out. Like, what's the reasoning why you want to wait till that late? And he just said with work and traveling, it's just not in his cards right now. But he wants to, when that time does come, he wants to be prepared for it.
He's gonna be very
and I think
prepared
from the conversation we had a few months ago, I think he's gonna be well prepared for it.
Yeah, I would hope so.
He's a frugal guy, so I think he'll be fine.
Perfect. Yeah, and I know too that people have been hesitant with the rate environment, and it's been talk of the town for the last 8 months now. Where do you see the rates going? Number one, do you see them increasing anymore? Do you see them staying where they're at? Do you see a steady decrease? How do you see the environment going forward?
The rates have been probably the number one concern for most home buyers currently, or most homeowners, I should say, looking to relocate for that fact. It's like, oh, the rates are so high, the property values are still too high. Like, why should I give up my 2.5% rate to triple that? That's something that people are really, really concerned about. I think it's by far the number one concern for most people today. Truthfully, we have no idea what the Federal Reserve is going to do with the rates. My expectation with, again, numbers that come out tomorrow, I think we're going to see a couple more hikes, personally, to slow things down even more. Because during COVID, we saw rapid growth within real estate, and that's just simply not sustainable for the long term. I think we're going to see rates continue to rise maybe throughout the remainder of the year, and then hit a stop and continue to drop next year. But home prices have to come down too. That's my personal opinion.
Okay.
So that's where I see things going.
And you know, the reason I bring that up too is I know that that is something that makes a lot of buyers hesitant right now. And something that I've always said too is if I could choose a higher rate environment or a higher home price environment, I'd pick the rates only because that's the variable of the two. Like if I go pay 500 grand for a house that in a normal rate environment, you know, is only worth 300,000 or something, but the fact that we're in, you know, when we were down in the twos, right? Like I know my parents are in the high twos. Every property value is so overinflated, and the reality is, it's like, yeah, you got a great rate, you got maybe a 3% rate, but you overpaid by 25% on that house. What can you change down the road? You can change the rate. You cannot change the price you paid for the home. So I look at it like, you know, if I'm gonna buy, and strategically at least, looking to save the most amount of money over the whatever 5 to 7 years on average that people often stay in their homes, over time, I think the rates are so variable and they fluctuate so much over time that it's better to pick a higher rate, pay lower for the house, down the road refinance. It's not a guarantee that the rates are going to drop, but there's a good chance just over a 7-year period that they would at one point.
The typical home ownership journey for most people is they buy a starter home, they sell that home to buy a bigger house to raise their family in. During that 20 to 25 year ownership, they at least leverage one refinance, and then they sell the property when they're empty nesters and they downsize. That's typically the way home ownership works throughout the course of most Americans' life. Can you repeat your question one more time?
Yeah, so I was just saying, like, it wasn't even a question as much as just like my perspective on the rates and how, like, you know, we're in the what, mid sevens right now, low to mid sevens.
I think we're at 7.25 at the moment.
Okay, so yeah, 7.25, and like I said, for me, now in the part of the country we're at right now, we're not seeing a huge decrease in home prices either. So we're not really seeing much of a decrease in any realm. I don't think it's caught up yet, but my point being, in a normal environment, the higher the rate, the lower the home price. And if I'm going to choose which environment I'd like to strategically purchase a home in, it's going to be the higher rate. It's going to be the variable, right? I want the variable to control the situation. So my idea is pay less for the house, wait for rates to come down, never be able to get that house for a different price.
And with certain programs too, you can always leverage a buy down. You can leverage different options too to even have that rate be a little bit lower than what the current market is at. So it just depends on what your goals are and where your finances stand and where things are basically at from there. Yeah.
Sure. Yeah, and I'm glad you actually brought that up because that was sort of my next question. I wanted to talk about programs. So for people who don't understand what you mean by program, do you want to sort of explain it 101? What is a mortgage program?
That's a pretty open-ended subject. A mortgage program can be anything from just a standard conventional 30-year fixed loan to an ARM, FHA, VA, Jumbo, Megastar's cash offer guarantee program, refinances, DSCR. There's so many different programs that you can use, and each has its own purpose. So that's one thing I do when I talk to my clients during their consultation meeting is I run numbers for different programs that may work for them, that I think may work for them, and we come to a collective decision to decide which program is going to be the best for them. And each program is going to have their own benefits too. Maybe it's a lower down payment, maybe it's a little bit of a lower interest rate, maybe there's some down payment, credits there too. It really just depends on what your goals are and where, what you're looking to do to buy a property.
Gotcha. So, like, would I be correct to sort of make the connection between loan programs and like just like a menu of loans? Essentially, like where you kind of pick and choose, like, all right, well, this loan may have a higher rate but a lower down payment, right? Because it's not buffet style. You can't walk up and say, I want this rate paired with this type of down payment and this term. Like the loans are already, or the programs are already put together ahead of time, and you choose off the menu which one works best for you.
And we customize them too, depending on their financial situation. Obviously, not every mortgage is going to be the exact same numbers. That's not reality. Every property is different too. So That's a good way to put it. It's like a menu. You
Okay.
can see the different options available to you, and that's what I do is I present them to you.
Gotcha. Okay. And so, I know we don't have a situation here to explain what, finding the right program would look like, but, when it comes to looking for programs, right? Like, I know oftentimes I'll go to you with a property for an investment. So, a program that you're going to put me in is not going to be an owner occupied conventional 30-year fixed. It's going to be a different type of program. So, would you say that oftentimes it's the property that the buyer is looking to purchase that dictates the program, or is it more so their financial situation?
I think it's a bit of both. It depends what the subject property is being used for. Is it your primary residence? Is it an investment, second home? That totally depends on what the usage of the property is, but also really comes down to your finances too.
Okay. Yeah. And I know we've run into that numerous times before where it's like, even when I was looking at one point, one of the programs didn't work for one small reason, which I think was income. So then you kind of have to readjust and move over to a different program. So, I think it's to sort of encapsulate it all, like the reason for all the programs is so that there is a second, third, fourth, fifth, and sixth option for every client.
Yeah, you want to present numerous options to people because at the end of the day, it's their mortgage and we're the ones educating them on what that program should be. It's up to me to say, hey, this mortgage program I think is gonna be the best fit for you. It's gonna be good for your comfortable monthly payment and also give you the potential highest ROI as well.
Right. Okay. All right. So sort of switching gears now, touching sort of back on when we were talking earlier about how sometimes people are a little nervous going into the home buying process and the lending portion. What are those documents that you need up front? Like the very standard documents that any client would come to you and you would ask them for.
To run a full pre-approval, there's 4 main documents that we need. We need most previous 2 months of bank statements, 2 years tax returns, so 2021 and 2022, a photo ID, passport, driver's license, whatever works, and then also your past 2 or 3 pay stubs.
Okay.
We only need 2, but 3 for security is
Right.
never hurts.
Yeah, the more the better. And, so I know self-employed is obviously 2 years of tax returns. So, in my instance, I had only been working for 1 year, but W-2. So in that situation, what would you do there?
You can use school transcripts as a form of employment.
Okay.
You can use them. I have worked with people that have only a year or 2 out of school that didn't have work, for the full 2 years before them. So we have utilized their transcripts from either high school or college to, help them get pre-approved.
Okay. And just sort of like clarify too, the reason for a pre-approval is really just when making the offer to the listing agent, to the seller. They want to make sure that, they're making sure that every buyer is qualified to purchase that house before they present the offer to the seller. They don't want to waste anybody's time, and they want to ensure that if they're going to accept an offer that has these awesome, crazy, ridiculous terms on them, that, you can afford the property and you don't, get halfway through any transaction and find out you can't afford it.
The whole point of a pre-approval is to find out your affordability.
Right.
We found out your maximum purchase price and what your comfortable monthly payment is going to be. That's what a pre-approval will state. But then what that letter is going to show you is, okay, you're approved for this amount, and this is what your monthly payment is going to be. And then the realtor goes and writes up a contract with that pre-approval, and you guys go submit offers on homes. And once you get an offer accepted, come back to me and we put it under contract. And that's when we gather more of the more in-depth documents and also put that loan together finally.
Right. Okay. And, I know we were talking about the documents, but obviously, regardless of what program, and, correct me if I'm wrong, almost every situation you need some bit of cash to put up into the deal. I know you can get grants, but, I guess what I'm asking is how important is liquidity when looking to get a mortgage?
Well, to clarify something, you cannot have paper cash. You have to have money
Yeah.
in the bank.
Yeah.
So if
Documented.
you're a bartender or a server and you want to get pre-approved, always claim your tips on your tax returns, but put it in the bank as soon as you possibly can. Aside from that, having liquidity is super important. Nothing will ever hurt having more money available to you. No one's ever gonna say, "Oh, you have too much money." Like, we can't approve you for this loan. Like, come on. Yep. Yes, you can.
Right.
The more money you have available to you when going through a house buying process, the better, because I can almost guarantee, unless it's a new construction, that that house is going to need some form of touch up or renovation to it. So whether it's just a quick paint job, you rip up the carpet and put hardwood flooring down, whatever the case may be, it's always good to have more money available to you when going through the pre-approval and house buying process, because you never know what may pop up. I always present closing costs and down payment amounts and all that stuff up front. I'm very transparent about it. One thing that I've learned over the course of time doing this is that through financial psychology, people hate surprises, especially when it comes to money. I would rather overestimate what they're going to owe, and then they go to closing and they owe less. That's a far better experience than if you were to undershoot and then actually owe more.
Right.
So I try to be very transparent and upfront about everything that comes with closing costs and down payment, and the mortgage as well. So that's one thing I really prioritize too.
Okay. And I know, and this isn't typically your first time home buyer scenario, but some people have assets, right? They have like an investment portfolio, or they're buying a vacation home and they have a primary. How do you use assets or, equity in a property portfolio, whatever? How do you use that, as liquidity, or can you use it at all?
Totally. Give you an example. I had a loan close on May 11th, and we utilized this guy's Roth IRA and pension to be able to pre-approve him for a mortgage. He was fully retired. He had a primary residence in Massachusetts, but he wanted to close on his new property, his new build, before selling that property. So he had this huge leverage position within that property and also in his retirement accounts. So we were able to utilize his retirement accounts to pre-approve him for a mortgage.
Okay.
Yep.
All right. And I think that covers everything on like the lending side.
Yep.
If there's anything you wanted to add, any advice that you have, anything you wanted to clarify, explain on the lending end of things.
Totally. Let me explain the cash offer guarantee program we have. So as we know, in this high rate market, FHA buyers are having a really tough time getting offers accepted right now. So even with a little bit of a lower interest rate, they're still having a hard time getting any offer accepted for that fact. So one thing that Megastar put together is this program where there's no financing or appraisal contingency if they approve for it. Appraisal and inspection is done within 7 days of the offer being accepted, and we can close in as little as 10 days. Essentially, that contract is what we'll communicate with the realtor with too, and we draft up that contract when we submit an offer, and it's essentially the same terms as cash, but it's still a mortgage.
Okay.
So it's a really great program. I think the record closing so far in the company is, I think it's 15 days.
Oh, wow. But
we have like test tried before and it can't get done in 10 days. So we're still looking for that, that person who can get us to 10 days.
Yeah, right.
But it's been a really successful program out west in Colorado and also up in Minnesota too. So we're looking to bring it out here to the Northeast and help people out with it.
That'd be awesome. I assume, like, obviously when you submit that offer, it's similar to like a hard money offer, would you say? Like the way at least a realtor would write that up.
Not at all. Actually, It's not hard money whatsoever. It's still an FHA or a conventional loan. It also works for investors too, not just home buyers or first-time buyers, I should say. It's simply just the same terms as what cash would do. Because typically, when you submit a cash offer, the loan can get the property can be closed in just like under 2 weeks. It's a super quick and easy process.
As quick as the money.
Versus you take out a mortgage, you need the appraisal, the inspection. The loan has to be put through under contract and processing. There's more steps that come with that. So what we do is we pretty much eliminate all those steps, and we expedite that process really quickly. And it's been very, very beneficial for people out west. And again, if you want to be the first person in New Hampshire with this program, let me know.
Let them know. Hit them up.
Yeah.
So, all right, that's awesome. I think that all would have helped a lot of people. Now, sort of switching gears into, and I know we touched on it earlier, introducing you, like, you're the only guy here in New Hampshire. I know I sort of asked what it's like starting your own business, sort of. I don't even want to air quote it. It is really your own business. What's your entrepreneurial journey been like, I guess? And let's start from maybe what were you doing in college, like towards the end of college, out of college, and what gear switched?
From the dawn of day, I've always wanted to do my own thing and be my own boss. Like, I've always wanted to run my own business and do my own thing from the moment I can even remember, like 4 or 5 years old, being like, I'm going to own a business one day. And I always also wanted to be an investor too, whether it was real estate, stock market, angel investing, whatever the case may be. I've always wanted to have my money work for me. I don't want to work for money. I want my money to work for me too. So I went to college to study economics and finance to get a better understanding of how money works. And I went to SNU, great experience. Got out of college and I joined Guaranteed Rate in 2021. Yeah, 2021. I joined Guaranteed Rate. And they taught me a ton about sales and networking and event planning and marketing too on top of that, while I also leveraged my degree with economics and finance as well. It was a pretty typical, you work your 40 hours, make your calls, report to your manager. I enjoyed the work, but for someone who does have that entrepreneurial mind, who always wants to go one step further, you're limited as to what you can do and accomplish there. You're also limited as to what you can make as well. So I knew I had to take that next step and join Megastar. That's what I did last year, and I'm beyond grateful and thankful for that experience on top of that.
Yeah. Yeah, no, and like I said, what you've been able to do over in this part of the country, being a one-man show, is like impressive, but also inspiring too, just to see how you manage it all, how you sort of come up with a plan, figure out what it is that you need to do in order to generate leads, but then come up with a system to actually, really work with these people, work with these clients, and provide a top level of service. And then, from there, really just make sure that everything is compartmentalized in its place. Things go very smoothly, when you push a deal through. So what's your future with lending and entrepreneurship in general?
I'll never stop being a lender. It's such a rewarding experience to guide people through an investment, a financial transaction like that. For the majority of people, buying a home is the biggest investment they'll ever make. So with that, you should want to be there to advise people and to guide people through that whole process, from the moment you talk to them all the way through closing and so on as well. So I never ever plan to stop lending anytime soon. It's a very rewarding, fulfilling career for me. But with that, being an entrepreneur, you want to provide value to the world and make the world a better place. And you don't have to recreate the wheel, but you can make it better though. I've always wanted to own a gym and to own my own fitness community that way. Whether it's here in New Hampshire, out in Denver, somewhere else, wherever the case may be. I've always enjoyed what working out has brought to me, and I'm now at a point in my life where I can't function without it. So I want to create a community and create a setting where I can hopefully inspire people to be in shape and kick ass every day. That'd be awesome too. I'd love to invest in real estate, invest in myself for that matter, and just try to find ways to continue to provide value to the world and make the world a better place.
Yeah. Yeah. No, I think that's great. And I know that's sort of been your MO really is like I said, it kind of goes with the quality of service that you give, right? Like you're very in touch with kind of helping people, and it's what I've noticed for you, it's almost not anything to do with the money. It has everything to do with the service and the quality.
The money will follow you.
Right. Exactly. And I think you've done a great job mastering that skill. What's 1, 3, 5 years out looking like?
1 year from now, I want to be a very established lender here in New Hampshire and out in Colorado too. For those that don't know, I am licensed in New Hampshire, Maine, Massachusetts, and Colorado. I split time between the two states, New Hampshire and Colorado. I just love both areas, and I want to be an established lender in both of those communities. 3-year plan, I would love to own at least 2 properties by that point. House hack, invest, find a way to live below my means that way through my monthly living expenses. Then a 5-year goal, this would be a dream come true, but to own a house in the Rocky Mountains at some point, whether it's in Vail or Breckenridge or Keystone, wherever there's mountains and I can have a house there, that would be an absolute dream come true.
All right. Any insights and advice for aspiring entrepreneurs? Because that's what this whole podcast is really about, is to bring in, like the younger generation of entrepreneurs who have taken those first 1 to 5 steps of their entrepreneurial journey, so that it's more applicable knowledge and advice to somebody just starting out. So any insights and advice that you have for somebody in that position?
Well, first things first, being an entrepreneur is a mindset. It's the will and the drive to want to work for yourself and to always stay consistent. There's going to be days where you're super driven. There's going to be days where you don't want to do anything, and anywhere in between. So it's important to stay consistent and persistent in your day-to-day practice. Like, you do real estate, new constructions, renovations. I do mortgage financing and hopefully fitness training and owning a gym at some point. That's entrepreneurial because you're owning your own thing. You're doing your own thing, and it's up to you to make your own income and help inspire other people along the way. So my advice for people who want to become entrepreneurs and own their own business, just do it. Like,
Yeah.
There's a part of me that wishes I never went to college, because I'd be 6 years ahead of where I'm currently at. But I had to have that experience, go to guaranteed rate, and then I would have never met my manager, Mike, if it wasn't for college, because I'm a friend of mine who worked with Mike beforehand at SNU. But at the end of the day, just go into it. If you have a dream or a goal in mind to do your own thing, just go do it. You never know when your day is gonna be last, and that sounds really cynical to say that, but that's just the truth.
Yeah, it's absolutely true. And correct me if I'm wrong, but would you say one of the reasons that you even have that partial regret is also just because, at least in my experience, I learned so much more being on the site. And I don't even mean job site. I just mean on the site of whatever it is that I'm doing. Like, in the business itself, I learn more hands-on than I do out of a textbook or in a college.
I agree.
Okay, yeah. So, and I think that's the biggest takeaway too, with like the, if you have a dream, if you have a passion, just do it, grasp it, take it head on, essentially. Mm-hmm. Partially just because I think it's more valuable to make those mistakes, make those mistakes in the field versus learning about the mistakes through a book that somebody had made 20 years ago.
Oh, and when you make a mistake that you inflicted upon yourself, you learn from that far more than you ever will from a textbook or a teacher teaching that to you. It's just the way that life is. So I think getting actual real world experience, whether that's internships through college or you don't go to school and you continue to work, there's always that what if factor. Like, oh, what if I just got into lending when I was 18, right out of high school? I'd have 6 years under my belt compared to 2. It's like, yeah, I look back and like, oh, what could have been? But at the end of the day, I don't regret a single thing, because I wouldn't be where I'm at today without, what I went through. So no regrets whatsoever.
Yeah, no, absolutely. I think that your path is still far ahead of 99% of people. So I don't think you have anything to worry about. All right, so this is kind of closing out. This is something I don't even think I had mentioned to you but this is something I do on here is so the prior guest, I have them ask a question to the next guest, but they have no idea who that next guest is going to be.
I like that.
So you'll obviously make a question for the next guest. You won't have any idea who it's going to be.
Sure.
So, whatever general question. The last guest, very simple. He asked, what is it that gets you up out of bed every morning?
Gosh. There's so many facets of my life that I want to be really incredible at. I want to be an amazing mortgage lender. I want to do amazing at triathlons when I race them. I want to be an amazing boyfriend to Jill. I want to be a great friend to all my friends. I want to continue to learn and do something new. Well, I want to continue to learn every day. If that requires doing something new or sharpening the knives, whatever that's going to entail, I want to be really good at it. I've always had high expectations for myself to succeed. And you can succeed with money in your career, but you can also not succeed in other parts of your life. And there's more to life than just your career and the amount of money you have. It doesn't matter if you don't have the right people in it, if you don't have life experience with that too. Go on vacation 2-3 times a year. You have to. I love the grind. I love doing what I do every day, but taking a week and going to ski Breckenridge, sign me up for that.
Yeah.
I'll be there in a heartbeat because I know that time away is so valuable to recharge and to enjoy a life experience that way. So what gets me out of bed in the morning is to just consistently be better in every part of my life.
Yeah. Yeah, just like the self-improvement angle of, it's not even it's not even the idea of just trying to perfect necessarily every facet of your life, but it's just more, I mean, at the end of the day, challenges are interesting because they're unexplored territory, and anything unexplored, I think, is super, super interesting to just the human brain in general. I wouldn't even say to me or you specifically. I just think anything unexplored, there's always questioning, there's always curiosity, and we're creatures of curiosity. So when we're sort of going into that time in our life where we're maybe a little uncertain, or not even uncertain, but just as much as hey, am I capable of doing twice the amount of volume next year as I did this year, right? Or am I capable of converting 2 leads today instead of 1 yesterday, right? Just from that small scale all the way up through to the largest scales, right? Can I double my income? Can I triple my revenue? Whatever it is, I feel like there's the curiosity and the challenge. So, I would agree with you there, sort of from my perspective as well, getting me out of bed as well, is sort of that challenge and what's next, what's there to explore that at the end of the day will make me more valuable and exponentially grow me so that I can explore even more.
And that's being an entrepreneur. Entrepreneurial mindset it's a mindset to consistently learn, to grow, to take accountability for your mistakes, to learn and grow and build from that. That's part of the entrepreneurial mindset as well, because if you don't have that, it doesn't matter how good your business is. If you can't take accountability for your mistakes, if you can't grow with the mistakes you've made, you're not going to see success that way. So I think it's really important to be open-minded, appreciate everything that comes your way, whether it was good or bad. You can learn something from it. And again, just find ways to consistently improve in life because your life will be better because of it. What's that saying where it's like easy times create easy men? What's that term, or hard term?
Yeah. It's tough times create strong men create easy times create weak men create tough times.
Yep. Exactly.
Yeah, absolutely. And it's I wouldn't even, if you shrink it down to a smaller scale, it's not even as much about the generation, right? One generation of fathers weak and this and that. I mean, I think it's your prior decision. You can compare that to your prior decision. If, if you were put in a tough situation, that probably made you stronger. Right? So if you're going to now use that strength to create an easier situation for yourself, a more challenging situation for yourself. And I'm trying to figure out how I can compare this. I guess the way that I'm thinking about it is sort of like the easier we make it for ourselves, I feel like the less apt we are to indulge in that curiosity. So I think it's always nice to keep yourself on your toes a little bit, right? Like always have those challenging, tough times, because it keeps you going, it keeps you motivated, it also keeps you disciplined. I think just I think that's the beauty of the entrepreneurial spirit. It's just you're always mid challenge, right? Because we chase challenges, we chase problems to solve. So you're never really satisfied. You're never in that weak time because there was never really an easy time, right?
Building a business, you're going to experience adversity. And if you can't handle that adversity, your career as an entrepreneur is going to be very short-lived.
Yeah.
So there's going to be hard times in every part of your life too. Maybe you are trying to get back into shape, or maybe your girlfriend dumps you, or maybe, someone in your family dies, or whatever the case may be. Everyone's hard times are different depending how they react to it. But it's important to, learn from it, build from it, and grow from it. Again, whether it's in or out of your business. So
yeah,
adversity, while I don't wish it upon anybody, it's bound to happen at some point, and it's up to you to know how to respond to that properly.
Absolutely. Absolutely. So, your question for my next guest. No rush on it.
Yeah, it's a good question. It's good because I actually have no idea who the person's going to be.
You have no idea, so you don't know what their expertise are going to be.
Right.
You have no idea what it is that they're interested in. So something that you think would benefit any listeners to hear an answer from somebody else.
If you didn't start today, how would you feel about yourself 5 years from now?
I like that.
Yep.
If you didn't start today, how would you feel about yourself 5 years from now?
You're not going to see change in a month. You're going to see change in 5 years. You never know. A month, it could be the same thing just over and over and over again. Those monotonous things. But over the course of 5 years, if you stay persistent and consistent to do the things you need to do every day to succeed, you're going to see that traction.
Yeah.
You're going to see those results come through. So
Absolutely. And you won't even, by the time you get to that 5 years, you won't even notice how much you've changed until you take your step back, right? Because it's like even now, I'm sure you do this too. We look back at, the last month, call it, right? That's probably the furthest we go back in our recollection of where we were at. And we don't see too much change. And this happens for the gym as well all the time. It's like,
most certainly.
You need that longer term scale as well. So it's, a lot can change in a month. Absolutely. But it's your perspective that you need to see on a grander scale how much has changed in a certain time period, and a month just isn't enough time. So it's the discipline, right? The consistency of it, obviously, and those are just very general expectations in this business. But absolutely, like just the
If you told me 5 years ago that I would have traveled to 11 countries, become an Ironman,
which is wild.
We can talk about that in a minute if you'd like to.
I want to bring that up.
Travel to 11 countries, become an Ironman, graduate college in 3 years, grow a nice beard, and then pursue the career that I'm in and have the progress that I've made so far. No way would have I believed you, and then have an amazing girl by my side. Like that's incredible to be able to have that. If you told me that 5 years ago, I would have been like, that's a dream come true.
Right.
So to see that progress come through is really cool, and I'm so excited to see what the next 5 years brings. I'm only 23.
Right. Yeah.
I'll be 28 in 5 years, and with that, there's still so much time to build and grow. So I'm pumped for it.
You'll be 28. Your buddy's going to be buying his place in 2028. So
100%. Yeah, I guess so.
You know what I mean? You'll be ready.
He'll be settled down by that point, hopefully. You know Tom Bullock?
Not personally.
It's one of the top agents in all of New Hampshire. I think he just got listed number 3 in all of New England for total listings in the month of May or June. That's crazy to think about. But he's not one of my preferred partners. He can be if he wants to be, though, if you're listening, Tom.
Tom, hit him up.
But a good mutual colleague of ours, he mentioned that he only closed like 4 or 5 deals in his first year, which was 2018, and he's basically just doubled that every year. And then 2022, he closed 66 houses.
Yeah. Yeah, and it's funny you just bring that up because I was just about to kind of work off of that point is to not overestimate what you can do in a month, but don't underestimate what you can do in 5 years. Because if you had told yourself 5 years ago all of what you had just explained, right, it would be a dream come true, but it would also be, I only have 5 years to do all this. That's not enough time.
Yep.
It is enough time and again, that grander scale, that perspective where you realize like 5 years is a lot of time. It's a lot of time for a lot to change. But again, like that barrier of entry in really anything, I think anything from taking yourself from scratch, from nothing to something valuable. Again, like I compare it to the gym because that's, I think, the most well known. It's easier to compare the gym than, I guess, business to somebody who doesn't necessarily have that entrepreneurial spirit. But, right, like that first month, that first 3 months, you may see some changes or whatever, and then it starts to slow down. It's not until you get to about 12 months where you really look back and you say, wow, I have come a long way. I think I overestimated what I would look like at the end of month 3 or month 4, but by month 12, I did not think I could look like this. Right. So or even month 24, right? 2 years, 3 years, whatever it is. I think the same goes for business, right? It's just like the expectation should always be going into it consistency and long term. And you'll surprise yourself when you don't worry about like, right, how quick can I make $1 million? It's no, how well can I build a foundation to continue to make me $1 million? I think, yeah, I'm not going to say it's easy to make $1 million in a year, but I think that it's more difficult to build a foundation, to build that residual every year, year over year, than it would be to just open up a service business in a fad market and make $1 million, and then you just essentially lose any income that could come because it was a fad, right? So
it's all about making the world a better place at the end of the day.
Yep.
And we work in an industry where housing is I believe, a human right, and we need to make sure people have that at their disposal.
Absolutely. I know we said we were almost done, but I want to hear about this Ironman.
I've explained this so many times, but I love talking about it. I'm very fortunate to have grown up in a household where both my parents worked out all the time. My mom was always in the gym. My dad's always on his dirt bike. He's in the gym every morning at 5:30. Just always involved with a healthy lifestyle. We always ate good. Working out and just being active and playing sports was just very natural to me and very, it wasn't forced either. Just something I loved to do.
Right.
I think having parents that were both active, plays a big role on that too. Both my sisters are also very active too, so it goes hand in hand. I've always loved weightlifting, pumping iron in the gym. It's it's one of the best feelings ever. So no matter how good or shitty your workout is, you feel good after. You feel good when you look.
Right.
I can't even talk right now.
Well, yeah. Mentally, you feel.
You look good, feel good.
Yep.
You know how it is. So. Did that all throughout high school and college, but there was a point in time during college where I'm like, I really enjoy this. I'm never going to stop doing it, but there's got to be something else that I can go train for and do. I've already thrown around 275 on bench. I've squatted 4 plates. I've hit some pretty good milestones for what my body can handle. What else can I achieve? And then in 2019, I watched this documentary of this guy named Nick Bare. He owns BPN Supplements. You may have heard of him before.
Yeah, that name's familiar.
He, again, same thing, was just a big, bulky bodybuilder. And then he said, I'm going to do an Ironman triathlon. His mom died of cancer and wanted to raise awareness and money for that form of cancer. And he documented his entire journey, from April, March when he started all the way through October, September, whenever he did the race. And it captivated me. Just watching every video, how he planned his nutrition, how he planned his training, how he how he trained his workouts and his rest days and his business as well, that it so captivated me to have this extremely lofty physical goal to achieve while also building a company that's far from a foundation. It's still growing. It's like you're running around with your head cut off type deal.
Yeah.
So he's actively growing a company while also producing content, while also training for this ultra endurance race. And just being able to manage all of that just so captivated me. And then there's this other YouTube channel called Yes Theory. Have you heard of them before?
Yeah. Well, maybe I'm thinking of Orange Theory, so completely different. Two different things.
Yes Theory is great. You should watch them sometime.
Okay, yeah.
But they also released a video of one of their members doing an Ironman too, and he documented the training and the journey behind it. And then obviously seeing videos of race days, it's really cool to watch.
Right.
So during that time in 2019, like, this is really cool. Like, maybe one day I'll do this. And then the next year, COVID hit, all the gyms are shut down. I'm like, okay, well, I have to stay in shape because I can't live without working out. So I picked up lots of running, biking, and I actually ended up playing like flag football and basketball with friends from my hometown.
Yeah.
Like, just because there's nothing else to do.
Yeah, right, yeah.
Right? So I was finishing up college at that time too. And then I ended up meeting up with some old high school friends of mine. All of them are military dudes, so they're all, they all have that same mindset. Yep. And we all started running together, and then one of them shot us a text and was like, hey, this Sunday, it's like a Thursday, this Sunday we're running a marathon. And I'm like, the most I've ever ran before was like 13 miles before. Like, I've never crossed that threshold before.
Right.
And I'm like, let's just do it.
We're running a marathon, I guess, yeah.
Right? So we went to the Nashua River Rail Trail, and we ran a marathon. The hardest pain I've ever felt, but the feeling of accomplishment and pride when you see 26.2 on the watch after, it's like, holy fuck, I just ran a marathon.
Yeah, seriously.
It's like, what else can I accomplish? What else can I do? And then later that year in 2020, when COVID was still very much so happening, there was this kid named Chris Nikic who has Down syndrome.
Mm-hmm.
And he finished an Ironman triathlon.
Oh, wow. Where is this kid from?
Florida.
Okay.
But he's big on social media.
Yeah.
He posts a lot. And funny how I got to connect with him. When I was working at Guaranteed Rate, I worked with a lender down in Miami. And this lender in Miami was a direct partner with this guy named Dan Grebe.
Okay.
Dan Grebe is a broker owner for Keller Williams Orlando office. And Dan Grebe was Chris Nikic's guide during the Ironman.
Oh, okay.
So that's how
cool.
I found out about him, is through Guaranteed Rate, and they, through just a business partner. And I'm like, wow, there's no way I can't do this now. Between two great documentaries I just watched, running a marathon earlier this year, and then watching this kid do it,
right.
I'm like,
yeah.
Okay,
no excuses.
Next year I'm doing this. So March 2021, I was looking at races, signed up for Indiana in October. I'm thinking, okay, perfect. Not too hot, not too cold, good middle ground, and it's flat. For a first race, it's flat, it's open, it's not going to be, it's hard, but it's not going to be one of the harder races.
Right.
Compared to like Boulder, Colorado, or Alaska. So I signed up for that one, and then from literally early April through early October, that was my life. I was in a prior relationship, and I was training too much, and she dumped me because I was training too much.
Priority straight, though.
I guess so, right?
Yep.
So went through a breakup during this training, but also,
That's that added layer of motivation, though.
The forbidden pre-workout.
Yeah, exactly.
Yeah. Just, I was watching Nick Bare's content consistently, just consuming as much as I possibly could to train as best as I can for it. I ended up doing a half Ironman as like just to get my feet wet.
Yeah, like an introduction to it.
In August of that year, and I actually didn't complete it. I finished the swim and the bike, but on the bike, my leg started to cramp up in my knee. And when you're biking for 56 miles during a half Ironman, to automatically shift from biking to running with that cramp, it's just a different form of motion. And my leg actually gave out.
Really?
Yep. And I could barely walk.
Was it like a dramatic fall too?
It was, yeah.
Oh, no way.
It totally was. If someone has it on film, please send it to me. I would love to watch
awesome.
it. I didn't make it 20 steps outside from the transition zone. Yep.
That sucks.
And I was so upset by that. I'm like, I've trained so hard for it. Like, I have to go back to the drawing board now. Ironman Indiana's in 6 weeks. Like, how am I going to make this work? Went back to the drawing board, changed a few things up just in time, and finished Ironman Indiana in just under 16 hours.
That's crazy. It's like that's to me a different level of character building, right? Because like we talk about the gym and what it does mentally and physically, whatever. I think they're two of the same, right? Like the way you feel physically affects how you feel mentally, and vice versa. But that's a challenge for sure. Getting in the gym every day, staying disciplined, but training for a marathon, let alone a triathlon, is. I don't think there's really much that beats character building from that. I really don't. It at least in a positive light, right? I mean, there's some negative things that can build your character and in hindsight look positive in the end, but that is just, so how many miles total is it? You said 56 was a half just for bike.
It's for the full Ironman.
Okay. Yeah.
Well, the half Ironman is 70 miles. The full Ironman is 140. You swim 2.4, you bike 112, and you run a marathon all in the same day. And what's funny too is like, when you wake up early in the morning, you're groggy, you're like, gotta get up and do it.
Yeah.
I woke up at 4:00 in the morning that day because race time started at 7. Want to get there early, stretch, train, get ready. I woke up and I was wired.
Oh, like yeah, you have to.
The second I woke up, I'm like, let's fucking go.
Yeah, this is game time.
Like, the second the alarm hit, I was up out of bed. Like, no one talked to me. I'm in the zone.
Yeah.
I've never really had that experience before, too. Because typically when I wake up, I'm like, 5 more minutes.
Yeah, 5 more minutes.
I'll get up.
Yeah, it turns into whatever.
No, I woke up and I was just, like, ready to go.
Yeah.
Pretty unique experience.
I imagine it's those milestone events. Like I said, it's those milestones that are building your character. And it just... And through pain is where I think the most value is brought, right? Like that's why, and I won't get too off on a tangent, but I want to sort of make the correlation. There's a reason why inherently, and I'm not saying this because it's right, but I'm just saying inherently, we notice that people who have more money are often just respected off the bat more. Right? They just have that obvious level of respect up front. And I think a lot of that has to do with the fact that subconsciously we realize that money, right, is tough to get. And so it's looked at as valuable, right? Anything that you obtain that was tough or you had to go through pain to get, right? Like you even see people with these giant scars on their body. You respect them more because although, they went through a lot of pain, that built their character, and you respect them for the pain that they went through because negativity or negative things that happen to you inherently, I think, are valuable. And they hold more value sometimes, I think, than the positives, only because they have essentially a larger impact. And correct me if I'm wrong from your perspective, but I feel like more often than not, my failures have a bigger impact on me than my successes do.
Yeah, absolutely.
And so I think that the failures and the pain and the negativity often is viewed as more valuable because it made more of an impact.
We call it character development for a reason. Yeah. When you fail at something did not work. So you go back and reflect on it. Shit, this did not feel good. I don't want to have this feeling again. What can I learn from this and how can I apply it for the future? Versus when you succeed, it's all serotonin, life's great, you're laughing, you're smiling, and sure, you cherish it, but you don't... I guess in that moment, it's like you built off of what failed, and you were able to, prevail from it.
Right.
So I think you absolutely learn more from failures than you do from success.
Yeah.
In any aspect of your life, too.
Yeah, or even... I wouldn't even narrow it down to failures as much as just pain, right? Just pain in general. Any sort of pain, like I said, the Ironman, you didn't fail at it. You succeeded at the Ironman, but that was pain.
That was absolutely painful.
I guess you could say I didn't finish the half Ironman. That's considered a failure.
Well, that is absolutely.
But you regroup, you go a different path, and you find a way to make it work.
6 weeks later, did the full one.
And now it's tattooed on my back.
I love it.
Yep.
I love it.
Totally.
All right. Anything that you want to plug here? Anything that you want to sort of add in? Final thoughts?
We said it earlier in the podcast, but I'm going to say it one more time. If you have some form of vision that you want for yourself, if you didn't start today, how would you feel about yourself 5 years from now?
I love it. I love it.
5 years from now, I'll be Megastar's #1 producer.
I love it.
I'll have the
You
house.
heard it from him himself.
I'll have the house in Breckenridge. What time? What day is it? It is July 11th, 2023. So July 11th, 2028. I'll be the Megastar's #1 producer that
I
year.
love to hear it.
Yep.
You want to plug any socials?
You bet. Nick White 1 on Instagram. Nick White Mortgages on TikTok. Nick White 0 on Twitter. Just Nick White on Facebook, and then Nick White on LinkedIn. And Nick White Mortgages on YouTube.
Send him a follow. If anyone needs a
Follow,
lender.
subscribe, friend request me, connect with me on LinkedIn.
Yep.
Give me the follow on every platform. And if you know anyone who's looking to buy or refinance a house in New Hampshire, Mass, Maine, or Colorado, soon to be Florida, let me know.
Love to hear it. Awesome, man. I appreciate you coming on today.
Tyler, thanks so much, dude.
Absolutely.
Pleasure.